Morning, everybody. It's Friday, the 29th of January. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Morning, guys.
Good
Good morning.
Episode 300 today.
Whoop.
Woohoo! 300?
Yeah, 300 episodes of Talking Ball.
Jesus, that must be 2 years then, isn't it?
No.
Weekends taken off, holidays.
No, you work the weekends, that counts.
Oh, of course, yeah.
Yeah, we've been adding those up.
Yeah, cool.
Cool. So you're both good, yeah?
Yeah,
Happy it's Friday, I take it. Yeah.
Glad it's Friday.
Looking forward to doing nothing this weekend.
Got turned away from the supermarket last night.
They chose you two of you?
Yeah, only one allowed in now.
Yeah.
Quite enjoyed doing a bit
That's
of
outrageous.
food and wine shopping together. I'd sit in the car for it.
So it's going to impact relationships now, isn't it?
I think
You
so.
can do it together online, can't you?
We had a right
No,
party.
but it's not the same, is it, Joe?
You've got to pick things
you
up
can-
and
you can
infect
do
them
exercise
and
in your house.
then put them back. You have to finger things in supermarkets, then put them back on shelves. That's the whole idea of it. The whole idea of going, isn't it?
Maybe. Okay, so what's going on with the news? So very heavily dominated by small cap action yesterday, and both from price action and news, we have seen these Wall Street bets guys get behind, obviously, a few of these stocks that are facing some short squeezes. So actively targeting stocks that have really high amounts of short interest and basically just trying to squeeze the life out of the funds and the people behind the shorting of them. So we're seeing more of that. We also saw a bit of a frenzy in silver yesterday. There was a new post on Reddit which encouraged people to pile into the iShares Silver Trust, and as a result, it was the biggest one-day rally in silver since August, which I'm sure we'll come on to on the chart shortly. Aside from that, we've got some wranglings with regards to COVID vaccines in Europe. The EU is expected to tighten rules on the export of the COVID-19 vaccines today. We've also had a fourth vaccine approved in the UK today, so we've got 60 million doses of that on order. Anything else that's caught your eye on the news, gents?
What I just wanted to talk about this Robinhood app.
Yeah.
Why did they have to borrow money? It's a share trading app, isn't it? So surely
right,
if they get hit, then they hit the market, don't they, or do they hold it themselves?
I'm not entirely sure, but they were struggling.
They've had a lot of bad press last couple of days because they keep on dropping the platform, don't they?
Well, a lot of these brokers keep stopping people from doing these trades.
I did see yesterday that a lot of small caps or they'd all been frozen out, hadn't they?
Yeah.
Well, the margin requirements have gone over 100%, which means you can't trade them. Is that right?
Yeah, effectively. There was a few brokers, a few of these sort of free, commission-free dealing platforms, particularly. Yeah, I mean, I don't know how you can stop people wanting to trade it. I don't know.
No, I mean, I think it all just comes down to people requiring margin to trade, and they don't. Obviously, a lot of these newbies don't realise that. It was funny. A classic is Cameron. Just sort of obviously got excited. One of his pals phoned up and said, "Oh, I bought GME at $350 last night," and he basically, I think it worked out. He put £500 in. He got a 5-to-1 leverage, and bought game at 350, looking for it to go to 1,000, obviously. And we were chatting yesterday, and Cameron sort of put some money in a regulated entity, and wasn't allowed to put one lot on, or even a fraction of a lot on, because it required the margin. So basically, the long and short of it is, his pal got stopped out because the price went over £500 against him, obviously. Yeah. And Cameron saved money because he opened an account with a regulated broker.
Wow.
So it's just, I think a lot of Robinhood.
Yeah.
I mean, I don't really know enough about how that works, but if it's a share trading platform, what are you doing? Are you buying the shares from Robinhood?
It just says, yeah, exactly. I mean, that's what you do with a spread betting company, isn't it? You don't actually buy the underlying asset. But it says here, it just says commission-free investing plus
Yeah,
all the
so
tools you need. So
that's why it can't operate if there's people sort of like got positions on, and all of a sudden it's gone against how much margin they require to have that position on. You either have, normally it's on stocks it's 2 to 1. You need to have, if you're buying £1,000 worth of stock, you need to have at least £500 in there. But if the position goes £500 against you, you need to put more money in, or the platform will stop you out automatically. So that's what a lot of people were moaning about yesterday. Oh, I've been stopped out, it's all rigged. But that's how trading works.
I thought they were investing. Maybe I was wrong. Maybe they are using leverage.
Unfortunately, we should know a lot more maybe about Robinhood. But one classic thing I saw this morning when reading through was obviously David Bell, who I absolutely love because of his sort of like very open and I wouldn't say aggressive way he sort of talks about the markets, but he's a very knowledgeable character in the markets. Writes his macrodisiac flyer every morning, which is brilliant, great to watch and great to read. But he sort of put something in this morning. Let me find it. It's about Robinhood. Lovely to have all these new followers. Can we just check that you know that you're following the worldwide Robinhood Society in Nottingham and not the Robinhood app? If so, a big welcome from Sherwood. So a lot of people downloading Robinhood Society in Nottingham. Shout out.
They are regulated under FINRA.
Yeah, so I suppose they're regulated because they hold client money, so they need to be. But I don't. As I say, I have a little look about it. But if it's like any other platform, you can say it's commission free, but then there's a spread price to pay, so it's not free.
And they offer options though, because most of this thing with that stock has all been option based, isn't it?
Yeah, but they can't stop people out on options. If you have to have the money in your account to pay the premium on buying a call or buying a put. But a load of the brokers yesterday limited what you could do. The major brokers said, it's a 100% margin on it, 5% carry on it. It's like they made it very difficult and made it. But it's the volatility has caused that. You could, because it's so volatile, the broker's got to protect himself. And then you can't use a leveraged or margined account, a leveraged account, and not get stopped out. If you've got all your money in there, the only problem people that were having, I saw as well, that was the platforms were going down.
Under the weight of pressure of people trying to get orders on.
Yeah, I mean, my son did send me a sort of thing yesterday, and it's like one of these sort of like, is it real or not? But from Robinhood, an insider. I work for Robinhood. Don't kill me. Low-level technical shit. Comp science is major, not finance side. Guess what we overheard today? Vladimir, yes, the founder of Robinhood, and the C-suite, so all the corporates, received calls from Sequoia Capital and the White House that pressured into closing trading on GME. I guarantee you the same took place at E-Trade and the others who closed trading.
Wow.
So a little bit of skullduggery going on, maybe. Wouldn't surprise me at all. Bandits.
You talk to the White House all the time, though, Stevie, didn't you? So.
Yeah, well, I used to. Obviously, me and Trump go way back. But yeah, no, it's. I think there's a lot of harsh lessons to be learned from yesterday. One, trade with a regulated broker, and you won't be able to afford to get the position on. And two, know what you're doing. Find out, get educated first. Don't just dive in there like everyone was doing.
Yeah, and is still doing by the looks of it.
Yeah, and unfortunately, a lot of people are going to lose a lot of money over it. Some of the, other retail traders are making good money, and good luck to them. They deserve it for what they've done. But it's got a lot of people, put a lot of people in a position, and giving the hedge funds a chance to get out.
Yeah.
Anyway, that's the rant over.
Yeah, thanks for that, Steve. That was good. Okay, so let's have a look at some charts then. Who wants to take a look?
I don't mind having a little look at the equity markets because it's a one of those. We've had a bit of sell-off over the last few days.
Share Stevie's then, not mine.
We've had a bit of sell-off over the last few days, and a lot of this sell-off, I believe, is caused by what's been going on in the hedge fund world, where they've had to liquidate maybe some of their bigger holdings to sort of fund the issues that they had with the small shares. And it's left us with a few patterns and a few sort of like scratching the head as to whether this is a bit of a top in the market, or it's just another one of those moments that we want to believe there's a top in the market, but there's not really. It's just a case of the money's going to come in and support these markets again. On a weekly chart, FTSE, we do see that we have seen the momentum slowing over the last few weeks. So this is before the GME story, and we've still got support below at 63.20 and 62.45, so trading around 64.67, so still a little bit of a way to go before we test that support. On the daily chart though, this is the more interesting one. We've had this trend line drawn in from these 2 points, well 3 points actually, so it is a proper trend line, and yesterday it hit it exactly and rallied back and closed nicely higher. So we got.
We're going to make another right shoulder, do you think?
Potentially, maybe. Yes, because see the size of this Ichimoku cloud. This is really good support, and this Ichimoku cloud is mirrored from what went on back here. So that's showing us what's where the support really is, and it projects it forward. So the trend line again this morning, we've dipped below it and rallied back. So potential for it to hold. And we look at it probably on the hourly chart, it shows it a little bit better. We see this this bullish outside candle on the hourly. Now that will be formed in 2 minutes time, so that's a potential reversal candle. So I'm slightly positive on this because there's a lot of people waking up this morning, and we've had this sell-off overnight. This is the DAX. So from about 8 o'clock yesterday, we've had this steady sell-off. And is it just in time for the European traders to come in, look at it and think, oh, it's selling off, let's try and get it to bust through these levels or see it break the support levels and let's get on it. But maybe it's an opportunity to just do what everyone's been doing forever, it seems, buying the dip. So that's the real takeaway from the charts this morning for me. Obviously, we've got, again, if we look at the 4-hour chart in the Dow, the support from this support level here held a little bit, but we're looking to test it again. We're below the Ichimoku cloud on the 4-hour chart, so it is negative short term. A little bit of the same for, I've redrawn this line this morning, and from this swing low, and there's 3 decent tests of this trend line now. Well, the trend line's formed by 1, 2, 3. There's two tests of the trend line. Again, the Ichimoku cloud, we're below it, so slightly negative, but I just got a feeling that the indices, will come back strong. I don't know about the timing of it. We're coming up to the weekend, so is anyone going to really put too much of a position on before the weekend? So markets on the indices are slightly negative short term, but I'd be very wary of dip buying. On the commodity side of things, funny enough, you mentioned silver yesterday. After the 6% pop, Cameron was talking to me about silver this morning. It's my son who's just taken an interest in trading. God help us all. And no, good luck to him. Sorry, that's what I meant to say. And yeah, so silver is another one of those short stories. There's a lot of there's a big sort of like it's short bias to it, which is probably unfair really, because silver does a lot for the world. But yeah, that sort of like saw a big rally in the market. Let me get silver. Big rally in the market yesterday. Daily chart, a bullish engulfing day and positive start to the morning. And so because Cameron couldn't buy GME stock yesterday, he decided to buy silver.
So it's doing all right.
Yeah, well, I mean, by the time he'd sort of like seen it, it was 26.50, so he's long around there. So he's on side this morning, so happy days. His target initially was, where do I put this line, Dad? And that was up about $35. He's already moved it down to about $28. So he was already charting without me even explaining how to do it. So that's good. Gold, on the other hand, was slightly negative, still under a little bit of pressure on the daily chart. We're hanging around the Ichimoku cloud. But gold safe haven, stocks going up. dollar going down, maybe. I don't know. I'm still not getting too carried away. I'd like to buy gold lower. Will I get a chance? Don't know. We're still sort of like sitting around this 1830 to 1870 sort of range. A break either way, and I think we'll get a bit of a run. So that's about it.
Lovely. Thank you, Steve.
Cheers,
Ian, show us what's going on in the FX stuff.
Still dominated by risk, isn't it? But we're really, I think the long-term picture, this is the dollar index again, DXY. We've still got this evening doji star on the weekly chart, but it's lacking any follow-through momentum. So this is the daily chart, and if we look here, we can see that basically for, I think, about the last 10 days, we've stayed in a relatively tight range, which normally means that people are getting topped and tailed inside this formation. So unless we actually clearly break this previous swing high, which is around about 1995, then there's scope for a larger correction down to make the right shoulder, which we've been going on about all week, of a bullish head and shoulders pattern. So this sort of chart, 4-hour chart, really explains it a bit better. We're just getting chopped up in here, and Elliott wave enthusiasts probably look at that as 3 waves. This is a very choppy 3 wave pattern, and if that is correct, then the next wave should either be in 5 waves or 3 waves to the downside. So basically it needs to get a bit of a jog on now, because it needs to get past this swing low. If we put a fib on here, then you've got a confluence area down here. Basically what normally happens on Elliott wave is, and I'll rattle through this, is 5 waves up to 1, 2, 3, 4, 5, then 3 waves, and then 5 waves. So this wave down spooks a lot of people, and it normally comes down to between 61.8% and 78.6%. We've also got a channel base there, so that's looking like prime support, but I don't know if we're going to get there today. I think stocks still look like dip buying, so if that is the case, then the dollar's probably going to drift lower. If we break, and clearly break, 1991, then I think the dollar's off to the races, but that would mean risk off, and I don't know if that's going to happen today. So sort of going back to majors again, sort of impulsive moves to the downside. So that what you basically want to be doing if you're trading Elliott wave is you want to be trading the impulsive waves, not the corrective choppy 3 waves that move back up. So 1, 2, 3, 1, 2, 3. Are we going to move back up? And again, we've got a resistance level here, which is close to a previous swing low, 21.15. What was support acts as resistance to the upside. You could probably get a bit of a channel on this. It probably is not a million miles off. Well, it is a million miles off, but I'd expect it to stay pretty choppy. Cable must be extremely frustrating if people are trading it, because all I keep on doing is just keep on moving this trend line. So first of all it was there, and then we got that false breakout, so then you put it there, then you get this false breakout, so then you put it there, so it just keeps on dip buying. And I don't know, are we going to get a head and shoulders? So left shoulder, head, and a break of this this trend line will probably line up with a break of a neckline, but resistance is seen here at 137.65, which again we've been going on about all week, so just above that previous swing high. So I don't think there's anything to say that we're not going to get that last push up. So basically the long-term bias is bearish, but like everything in foreign exchange and trading, it's all going to be about timing. Here again, 1, 2, 3, 1, 2, 3 looks really choppy. Does look like a flag formation, but we could quite easily get down to this sort of level, which is the base of this this channel at 88.29, and it's also a previous swing low at 88.22. So again, prime support. While we're inside here, I just think we're going to get chopped up even more. Sound quite doom and gloom, don't I? Talked about this level yesterday. I think this still could be prime, but if stocks keep on grinding to the upside, then we could see this flag formation rallying up to this sort of level, which is 105.21. which is a flag target. We've got a 261.8% extension from this wave located here at 104.94. Dollar CAD, again, we're seeing this risk on, so a move lower in dollar. The measured move target is up here, 129.60. If we can get a retest of the channel break, or sorry, the wedge breakout, which is at 127.60, I think that's worth an opportunity to get long of dollar CAD. And then this is really messy. I haven't really got a clue what's going on in Aussie or New Zealand dollar. Sort of, we broke this, what looked like a triangle formation, to the downside. It would normally extend quite impulsively lower. It hasn't. It's actually retested and broken back up. And we've now got a morning doji star on this chart. So I haven't really got any levels on Aussie dollar or New Zealand dollar. And I think we could even break past these sort of previous swing highs and just push up to get out a few sort of stubborn shorts. Euro sterling, thought this was quite important. It's a 161.8% extension level. It's a long-term extension level. This is an 8-hour chart, and we keep on spiking below it. I think we're going to see just choppy consolidation around here before we get the next leg lower. And then last but not least, Euro yen. I did think this was a wedge formation yesterday, but it has sort of broken to the upside. If we look at cipher patterns, then this is sort of warning us that we could still get quite a decent move to the upside. I'm actually going to pull it lower like that, because that is close to 38.2% pullback of this level, which will normally mean that we won't go to this confluence area, we'll go to this one. So that would mean quite a strong recovery in indices. So at the moment, I think it's still risk on until, like Steve was saying, these dips just keep on being bought into. And I think it's wrong footing a lot of people in FX, and it's definitely wrong footed me this week.
Okay, great. Thanks, Ian. I agree. It's just choppy chop, and probably more of the same.
Didn't wrong foot any of our analysts yesterday.
No, they nailed it, didn't they?
Yes, they had 16R in the day trades yesterday. A bit of a rough overnight start with the Asian indices coming off yesterday, but they made a remarkable recovery.
A lot of that was selling breaks and buying breaks, wasn't it?
Yeah.
Yeah, so, yeah, which I'm trying to ban.
Momentum.
I'm trying to ban those.
They could start calling you Robin Hood.
And a lot of dip buying in those stocks. So when those stocks were coming off yesterday, they were buying into them.
So I think the dip buying probably more than anything.
Okay,
excellent.
Gun to the head. Nothing to speak of. We had 3 trades and we had 3 stop outs. So, wrong footed very much on that yesterday. Let's quickly gloss over that and then move on to today. It's a 300 episode today. So let's get some massive wins, shall we? To close out the week. Who wants to go first?
Well, I was going to buy silver at 26.50, but it's been up to 27.12. So you can't buy me on that. Yeah. No, go on. You go. Who's going first? Who's going first?
I'm going to buy the FTSE because I like what you mentioned there on the chart.
Yeah, thanks.
I've got some support there on the 31st of December. Posted this massive reversal over the last hour, so I'm going to have a punt at that. Going to buy it now at 64.72, targeting 66.38. Stop loss below the lows of the day at 63.93. Not the massive win I'm after. If it does come in, it'll only be 2R, but that will do. Who's next?
Ian.
I was going to buy silver as well.
You can do it. Go on.
I'm going to do this Bitcoin cipher pattern all the way up here. That's going to get all the Bitcoin guys.
Their juices flowing.
Yeah, especially when it's all driven by retail.
Exactly. I mean, it broke
driven by retail at the moment, isn't it?
Yeah, broke above the 3,200 resistance level.
So what am I getting along at?
On.
What is the price? 3.6. You have to do it very quickly, don't you? Jesus Christ. you go.
It's a lovely breakout above that 34,888 level, and then a lovely retest, and it's going, Tom.
Yeah, I'm getting long at 3.6. I'm already on side. 3.6 the figure, targeting 503.02 with a stop at 340.86, giving me a whopping 7.47 R.
That would be very welcome indeed. Steve, you got one?
No, but what I will do, I'll go with gold this morning. I think just a little bit of indecision yesterday, a good start to the morning, and I like gold. It's shiny. Yeah, so I'm going to look to buy gold this morning. It's going to be, I'm not looking for too much out of it, but I am getting in on this rally. Getting long at 1853. I'll pay the 14 as commission. And looking to target a move up to 1873. Just under the previous swing high. And I'll have, I'd like a 5-to-1 risk reward, but that brings my stop in at 1848, which is pretty damn tight even for me. But let's go for it. 1848 the stop, 1853 getting long, targeting 1873. 4-to-1.
Good luck, mate.
Cheers.
So data-wise today, we've just had German GDP out. That was at 9 o'clock. The growth is expected to fall to 1.2% quarter on quarter and 4.6% year on year. Seen any updates on that, gents? I haven't seen the news.
I'm just looking at this percentage rise in Bitcoin. What? Anyway.
So later today, we've got Chicago PMI at 245, index to fall to 57.8 according to the estimates. And then at 3 p.m, we've got the US pending home sales, which is expected to rise to 17% month on month. So just a few bits of data out today. And I guess we will be following what happens more with this retail story and the retail revolution that's underway, forcing some of these stocks and, herd mentality, pushing things higher. So let's see what
that'll be a 40% rise in Bitcoin if it hits that Gartley pattern.
From where?
That's your intraday trade, is it?
From where it is at the moment.
It's up 40%.
40%. It's free. If trading 36,000, it will take it to 50,000.
Oh, is that what you're targeting?
Mm.
Oh, that's ridiculous. Stop. You're not allowed to do that. You can't do that.
It's on the move.
Stop it, Robin Hood. He can do what he likes. You can't stop him.
Yeah, look at this. 40.9%.
Yeah, it's making it up as you go along, mate.
Yeah, I mean, I'd sort of like look at that for a long-term trade, but if that gets there today, there's something going on.
The retail traders are dominating the world.
Yeah, let's hope
Good
so.
luck to them.
Power to the people.
Indeed.
Yeah,
okay.
Exactly.
Right, let's wrap it up there, gents. Hope you have a great weekend, and everybody that's watching has had a good week, and we'll be back on Monday morning.
Enjoy.
Excellent. Cheers.
Cheers, Em. Bye.